Well, most people have it, and a lot of people might not fully understand it. I'm talking about insurance. Home, auto, life, or renters, it goes on, and it can all get very overwhelming. That's why I'm talking to Martin Joseph from Northwest Insurance to break it all down. Martin, can you hear me?
I sure can. How are you doing?
I'm doing great. Thanks for being here to break this down for us. What's high volume home insurance and who exactly needs it?
Well, everybody needs home insurance. Anybody who owns a home, I should say.
And so, what about high value home insurance? Is that a particular kind of insurance that folks need? Does it mean that if your home is valued at a higher price, that you should be getting that?
Well, the home insurance is valued much different than market value or what you pay for a home on the marketplace. Homes are valued by what we call replacement cost, which is what it would cost to rebuild the home from the foundation up. So that a home could be in one section of the city and let's say be worth $200,000, and in another section of the city may only be worth $100,000. But if both homes burn to the ground or in a total loss, they both would cost the same amount to rebuild, or the replacement cost would be the same.
And then,
So
what about your credit? Oh, go ahead.
yeah, no, I'm glad you brought up home insurance and auto insurance. The rates are fairly figured complex. People don't understand that there's several factors that figure into your rates. One is your credit rating, and it can be a big effect. As much as 50% of your rate could be based on your credit rating. Now, insurance companies don't do a credit score, they do a soft hit, but they're looking for things like charge off accounts, bankruptcies, liens, judgments, foreclosures, such as that. They get a general score. Also, your prior insurance has a giant effect on both your auto and your home insurance. The longer you're with the same carrier, the better rate you're going to get when you finally do look to switch insurance. Consumers who jump from company to company to save a few dollars, it really ends up hurting them in the long run, in that they don't have enough past history with one company, and the carriers don't like that, and they'll put you in a higher tier than if someone who's been with their past company for over 3 to 5 to 7 years.
And I'm glad you explained that because I wasn't aware that the credit score can really impact like that.
Yeah,
What about going for the cheapest options? Those bare bones carriers, we see them advertised on TV sometimes. Can that affect your rates when you switch insurance
absolutely.
providers?
Absolutely. Not only do carriers, especially preferred carriers, look at your how long you've been insured and with what company, and also your limits of liability on auto insurance. If a lot of what you see are carriers that only write minimum limits, we call them the bare bones companies. They write minimum limit coverage. They give rates are very low, but they also give very minimal service in the event of a loss. These are
And
the
we have
companies
a
that
few.
go ahead. These are the companies who do try to get out of paying claims.
Yes, yes. Okay. Well, thank you so much for sharing. I know we're working through some technology there as always, but this is really good
Sure.
information, folks, the things that people need to know about. Thank you.
Absolutely. Thank you for talking to me.
Yes. Okay. Learn more about how Northwest Insurance has been protecting families and businesses since 1958 at northwestinsurance.com. Some really good stuff there.